solitary assumption that Japanese interest rates would stay at zero forever. But in 2024, that 30-year-old assumption completely shattered. For the first time in 17 years, the Bank of Japan actually raised its interest rates. It wasn't a huge hike, but it didn't have to be. The market's reaction was swift and brutal. That free money trade? Yeah, suddenly it wasn't so free anymore. And this is the critical part to understand. That basic math has completely flipped on its head. In the old days, you could borrow yen for free, and hedging, basically insuring yourself against currency swings, was super cheap. It was a clear path to profit. But now, borrowing costs money. Hedging is crazy expensive, and that whole trade has gone from a sure thing to incredibly risky. And when the math flips, guess what? The money flips too. All that capital that flooded out of Japan for decades is now starting to rush back in. The fancy term for this is repatriation, and it's like watching a giant financial tide, which has only gone one way for 30 years, suddenly reverse course. So why on earth should you care about any of this? Because if you're thinking this is just some weird Japan problem, you are missing the single biggest piece of the puzzle. This is an everything story, and it has a direct line to your wallet. You know, the famous investor Ray Dalio put it perfectly. The bond market is the backbone of everything. The interest rates set there are like financial gravity. They pull on the value of every other asset. And for decades, who was the single biggest, most reliable buyer of U.S. government bonds? Yep, Japan. And when your biggest customer walks away, it creates a massive ripple effect. For stocks, higher bond yields squeeze company valuations, even if the earnings are great. For your house, your mortgage rate is tied directly to those treasury yields. If Japan isn't buying that debt, the yields stay high, which means your mortgage payment stays high. And for credit, well, the party's over. The era of cheap debt is coming to an end. Let me put it as simply as I can. That dream of refinancing your house into a 3% mortgage, that was a dream powered entirely by this fire hose of cheap money flowing out of Japan. As long as Japanese investors are selling U.S. bonds instead of buying them, that dream, well, it stays a fantasy. For 3 decades, the U.S. and the entire world have been on the receiving end of this incredible flow of capital. We've all gotten completely hooked on that liquidity. It was like free oxygen for the financial markets, and now somebody is turning down the supply. That Japanese Wi-Fi that quietly powered the global economy for a generation is cutting out, and that leaves all of us with one massive question to think about. Who's going to pay the bill?